Hello and welcome to this week's Elite webinar. I'm Riz, and we're going to cover all the amazing stuff that's happening in the market. No fluff, no nonsense, and of course, no sponsored bullcrap. We don't shill anything that we don't believe in, and one thing we definitely do believe in is the U.S. economy, the American people, and of course, the stock market. And well, what a stock market it is. It just continues to go up and it's been on a complete tear so far year to date. We're looking at what are we looking at here? Roughly 23% on the year. Okay, in gains, a phenomenal year, especially considering last year was a solid double-digit year as well. But when I look in here, zooming in, taking a look at what we've seen over the past week, a continuation of last week as well, and take a look at the RSI getting pretty close to being overbought there. Not quite, but very close. As we enter into the last, let's say, last 2 weeks of October, and then of course we know everyone's big catalyst that's coming up. I'm actually going to make a line here. I want to put like a line here just for fun and make it big, bright, and red. Okay, this will be letting us know what. Okay, there you go. Let's make it red color. Make it big. All right, that line is election, federal election. Okay, let's write it down here. U.S. election, November 5th. What is that, a Tuesday? All right, it's a Tuesday. Center, right, top, what's going on? Okay, all right. Yeah. Okay, there you go. U.S. election. That's what we're looking at on November 5th. That is what really everything is to play for this year. A lot of the juicing of the market we've seen recently, and I mentioned this in Elite, and I'll say it again for those of you that are watching this. A lot of the recent market bullishness that we've seen over the past week, 2 weeks, is essentially the market uh, being bullish on or pricing in a Trump presidency or a Trump win. Okay. Uh, Now, of course, is that baked in? Is that a given? Does that mean if Donald Trump wins uh, the election and that the market's gonna go higher and higher and higher just because? No, that's not the case. They're two separate things. What we do know is the financial markets are looking at Donald Trump as being more positive for the market as a whole. Can it be right? No. Is it set in stone? Not necessarily. That stuff can change on a dime. But as of right now, that's what we've seen. And we don't talk about crypto much, but even the crypto markets are also uh, indicating that as well. Okay, so politics aside, your bias or your preferences aside, that's really what the market is kind of indicating, and we've seen that as we get an idea of the poll numbers, as we get an idea of the sentiment. Remember, almost everything in the market in the near term, right, when it comes to a couple weeks, even a couple months, is sentiment. All right, and in stocks as well. Okay, so it's important to keep that in mind. So markets continue to run, getting very close to overbought. In my opinion, we continue to be overextended, and on many metrics, the market is overvalued. But hey, that doesn't really matter too much, like I said, in the short term. Moving on to the sectors. Let's take a look at the sectors here. Look at this, right? We've got once again the leaders continuing, right? We've got the S&P 500 up about 23.5%. As I said, we've got utilities communications and financials as well, and of course tech just slightly below the index ETF here. But all things considered, those are the big ones leading, right? The rest continue to kind of just move sideways here. Energy being the biggest laggard here, with only 6% up on the year so far. But everything continues to be above the zero line. Okay. Not much of a difference there, so I'm not going to keep on harping on about that. Um, Take a look at oil. Very interesting here. Take a look at what's happened as it's kind of con squeezed into this. Again, I don't like flags, triangles, pennants, but really rejection here of that 73, 74 area. Sorry, 74, 75 area, and then come back down, right? The reason it's come back down is because the conflict in the Middle East, Israel, Iran slash not Iran, but Lebanon has been obviously ongoing, but didn't escalate as much as initially thought 2 weeks ago when it spiked. Okay. Also, OPEC came up and said, look, we might actually be seeing a continuation of lower demand, right? So their prospects, their sort of outline on what they consider to be the demand for the broader oil market is lower than anticipated, let's say months ago. Hence, we've also seen this a little bit drop down. But still, oil remains at that 68%. Take a look at this, right? Big, big, big support here. I would call this long-term support. And as a result, I'm going to move this pennant down here. Okay. This is going to be support for everyone watching. I'm also going to get rid of this. Again, I don't want to make people come up with the idea that, well, Riz, well, you don't like pennants and flags, and why are you utilizing them so much? Well, I'm not. That's just been up there for quite some time. But this support here, I think everyone can agree, support, long-term support, right? Remember, it's going back to 2023. So this is what I call long-term support. We'll see if it breaks, okay? It's not precise. I don't have it like precise here, but let's just put it to roughly 60. I'm gonna put it at 68. Okay, around 68. Come on. 67, 68. Okay, they're close enough. Um, Gold, on the other hand, I mean, what can I say? What can I say about gold? What a colossal. Every time I look at this chart, I'm just like, it's always like, oh, it's more of the same. It's just higher and higher. But when I look at it, in the grand scheme of things, I'm just floored because in all my life of trading, not all my life, but all my trading career, I haven't seen a move like this in gold, this extent. I just haven't. Like, this is an asset that's moved roughly 2 to 3% or so, 5% if you're being generous on a year, if even. And it's had some very like lagging, non-existing, non-movement of years. But here we are, um, starting of the year to now, and gold is up roughly 35%. I continue to tell you guys that something's going on. Anyone know what's going on? I don't know for sure if anyone knows with certainty, but we all know, whether you're an institutional trader, whether you're a retail trader, whether you're in banking, whether you're in finance, whether you're in economics, whoever, if you're looking at this and following the price of gold over the past, year so far, something is going on, and it's quite absurd. It's quite, I don't want to say concerning, but in a way it kind of is, because gold is usually signaled, some volatility, or a rough time in the economy to come. Um, but it's also signaled some downward pressure in the US dollar. It's also signaled some economic turbulence, right? So here we are, but of course the stock market's going up, the economy continues to be strong. US dollar, which we'll touch on next, continues to go up. We have bond yields continuing to go up. Like it's kind of frustrating that it's the same old as last week, which isn't, which is fine. Not everything's going to change dramatically from one week to the next. But in a way, it's almost like, wow, like it just continues to not make much sense from, not that we can't make sense of it, it's that we're getting a continuous stream of conflicting information again and again and again, week by week by week and month by month. And here we are. So as a trader, that can get a bit confusing, a bit frustrating because you're like, oh, I thought when rates go down, bond yields come down. I thought when rates come down, the, US dollar comes down. And then I thought when, uh, gold goes up, it signals that the stock market might come down and it signals that, the economy might be weakening. No, none of that, it's all gone the opposite. None of that has panned out. So for those that have kind of followed that playbook are probably very, very befuddled. They're like, what the absolute heck is going on? And they'd be right. They'd be right to be confused. And it doesn't matter if you're Warren Buffett or if you're an economist or you've got your PhD from an Ivy League or you're just starting out in the last couple of years and you're a retail trader. Everyone just kind of befuddled. And guess what's going to happen? I can tell you right now what's going to happen. If we do get a sharp economic turn, all the pundits, all the people on the media, the news, financial news, even politicians, everyone is going to pile in and say, well, look, the signs were there. Oh, look, the yields, bond yields were up. They're not, the politicians might not, but, the economists will be like, well, yeah, we had heightened, the bond market was signaling something. They'll say, well, look at, the oil market. The oil market was pricing in a recession. Even OPEC said decrease in demand. Oh, look at gold. Gold was going higher and higher and higher. We should have known this was a signal, blah, blah, blah. All these people are going to come out of the woodwork after the fact. Right now, they're all quiet. I'm not gonna say I'm the only one talking about it, but as you know, we take a different angle, a different lens on markets, and it works. It might not be for everyone. It might not be the most sexiest or fun or, like I'm not showing pictures of Lambos and bottles and models on here. But what we do is rooted in reality. It works, and it's really something that I believe in. And as a result, when I talk about these things, I hope it gives you some insight. I'm not here to write down what's going to happen next week, next month. No one can fully know that. If I did, you know, oh boy, I don't need to know 1 month in the future what's going to happen. I just need to know 1 minute. I would say even a second in the future, and that's enough to be pretty much the ruler of your domain. You just need 1 second ahead of everyone else. And you know, once you realize what I mean by that, uh, it's profound. But nonetheless, what do we have here? I usually would go to the economics updates, but I take a look and there's nothing besides durable goods. So even bringing that up is a waste. There's not much going on from a major events. What we do have this week is a lot of Fed speakers yapping away, of course. And then of course we do have you know next week not much from that standpoint, but next week we do have a continuation of earnings season. Oh boy, packed calendar, right? Not too much interesting on Monday. Uh, After close, if you are interested, Logitech, and we have Nucor, um, you know, uh, resources, iron, metals, that kind of stuff. Logitech, obviously, the electronics, the accessories, like mouse, keyboard, all that kind of stuff. And then Tuesday is really when things start get going, right? We have Verizon, obviously, GM. I'm not a big automaker guy, but GM is reporting. We have 3M, of course, Raytheon, RTX. Lockheed Martin, you got the defense stocks, right? Not the defensive, but the defense stocks, like the military um, uh, complex type of stock. So we got Quest Diagnostics, Philip Morris as well, the company that um, essentially the cigarette tobacco maker. Uh, and then we have on that pretty much that on Tuesday, of course, we have Texas Instruments as well. So it's another semiconductor chipset play. We got Wednesday Boeing, everyone's favorite flying coffin. That reminds me of Chris. I remember when I first said that, Chris lost it. I haven't seen him laugh that hard on webinar. Um, but anyways, uh, Boeing, Boeing, everyone's favorite flying coffin. Um, which is kind of scary because when I say that, like we all have flown somewhere and will most likely continue to fly somewhere, and most likely it will be a fucking Boeing airline. So I don't know if I should be calling it that. Anyways, AT&T, Coca-Cola, everyone's favorite fizzy drink, or if it's Pepsi, whatever. I don't really drink, so believe it or not, I have not drank any carbonated drink. Forget Pepsi or Coke. Pepsi or Coke specifically, guys. I'm not shitting you. I'm a bit extreme. I have not. I used to have one 2 liter bottle of Coke or Pepsi, whichever. I wasn't a snob. I didn't discriminate. I used to have one or the other, a 2 liter bottle back when I was 13, 14 each day. Okay. Now not I'm not kidding. This is not exaggeration. Every day. Every day. Like I loved it. I loved it. I was just and of course, to the dismay of my parents, God bless them. I mean, they're still around, but I mean, God bless them for having to deal with my stuff. But um, man, oh boy, they're like, "What are you doing? Stop! Like this is banned. This is a banned substance." But nonetheless, what are you gonna do when you're first year high school, second year high school? Like you're new, you're just off the rails. Eventually, I stopped, and then I went on to coffee, and then I went on to having 3, 4 extra large Tim Hortons coffees a day from the age of 15, 16, 15, yeah, 15, all the way to 2021. And then I quit that cold turkey too. So I quit, soda pop, as we call it in Canada, cold turkey. I haven't had Coca-Cola or Pepsi since the age of uh, uh, probably 16, 17. So that is yeah, probably 16 years now. Yeah, imagine not having a single sip. I kid you not a single sip. And then coffee, the last time I had coffee, uh, whether it's black coffee, whatever, cream sugar, I haven't had any coffee uh since I was 21. So that is yeah, probably 12 years. Yeah, 12 years. So that is my little diatribe there. And anyways, uh continuing on, you notice you're gonna see GE. You're gonna see GE Aerospace on Tuesday and then GE Vernova on Wednesday. The reason being, GE did like a spin-off. They essentially split GE, the complex, the big giant GE company into different companies, right? So that's why you're going to see the 2 different ones. We got not much else strikes me on Tuesday, Wednesday before open. But of course, we got everyone's favorite electric car maker and stable genius at the helm, who's tweeting 1,000 times a day, but apparently he works 28 hours a day too. But anyways, Tesla. We got Tesla, right? We got Lam Research, another semiconductor, everyone's favorite dinosaur, IBM, which somehow just continues to keep going up. God knows what they do. God knows what they're doing. I don't know. I don't know. It just makes no sense how they're still here. But hey, IBM, yay, servers. And then that's kind of really the only thing that sticking out to me. T-Mobile, whatever, Las Vegas stands, not really interested. We got a couple airlines, American Airlines, Southwest. We got UPS, of course, logistics, shipping. We've got What else? Thursday seems pretty muted beyond that, Skechers if you like shoes or whatnot, but other than that, that's about it, you know. And then Friday non-existent, right? Colgate, Palmolive, uh, if you care about that consumer staples, right? So yeah, pretty exciting week. Not the most exciting. That will probably come next week with, the likes of Amazon and Microsoft and Apple and Google and Meta. But this is really heated up. This is like the first full earnings week. Last week was getting started. This is the full beats, right? UPS, Abhishek says here, UPS in the chat, everyone's favorite disappointment. Yes, yes, absolutely, absolutely. There's plenty of those. There's plenty of those kind of stocks. But besides those disappointing stocks, everything else just you'll notice like has had a solid year, right? There's been some of these laggards, these companies that have just oh, you look at them, you just get depressed, right? UPS being one of them, but the rest has just had a tremendous year. I mean, there was a time like 3M, for example. I remember there was a time with 3M, you're like, are these fuckers going bankrupt? Like, are we ever gonna have duct tape anymore? Like, are we not gonna ever like use like sticky tacks and like whatever the fuck else they make? And I was like, I kid you not, I was like, what the fuck is going on? Like. They were slaughtering this thing. They were butchering this thing. They were dumping the stock. It was like the stock is nothing. It's going under. It might as well be like the equivalent of some, you know, penny stock that doesn't provide anything and is not going anywhere. And boy, they just hammered that shit. And now let me bring it back here. Let me give you guys an idea. Like look at this. Start of the year. Let's go start of the year to now. Again, this is not precise, right? Nearly 50%. And this is like it's not a large mover. Stock's not a large mover. Okay? Like they hammered this thing, right? Is it still far below where it was in the 2021 peak? Yes. That's the thing, right? If you zoom out, you're like, holy shit, okay, well, even that was not looking ideal. Well, look at this. Oh my God. You go back to 2018, hasn't hit the 2018 levels ever again. So this is why people need to realize, like, holy crap, just because something hits something before that you could technically be looking at a stock and look at an all-time high, and it may not hit that all-time high in the next few years or ever again. This is very important, and people have forgotten this because they think everything goes up and keeps going up no matter what it is. That's not necessarily the case. Again, not knocking 3M, great company. Not the most sophisticated, not the most fastest growing, not the largest, most sexy company, but still a decent company nonetheless, right? But here we are, it's something important for people to know. Let's check on our good friend Cisco. Um, let's go back to monthly. This is always a fun exercise, right? This is always a fun exercise because believe there's a lot to be learned about the financial markets when you study the history of the financial markets or a stock, so to speak, right? So Cisco, obviously the maker of think electronic product like server, not server, but like routers and networking, electronic network parts for your computer, uh, you know, wireless, USB plug points, all that kind of stuff. So back in 2000, just before the dot-com bubble bust. It hit a high. Let's forget the candle, but it hit a high of roughly, what is that? 77.38 right now. Nearly, let's just say 14 and a half years after, it's at 56. So still from that point, 27% down. So if you were an investor, you were watching Cisco, or God forbid you bought around there, you can fast forward 14 and a half years and you still wouldn't, um, be at where it was. And this goes to show you, do not fool yourself into thinking that what we've seen the past few years is the norm. If you go back in history, even the financial markets have had periods, the broader stock market has had periods where it's taken years to come back to where it was, right? And I know I've done this lesson, I don't want to call it lesson, but I've done it before where, you know, it's taken years. Just take a look at the dot-com era, right? How long did it take for the market to come back from there? Again, this is the S&P 500. This is not a stock. It's a monthly chart. You know, if it hit the highs in August 2000, right? It took a good 7 years to get back there, right? People assume that, oh, okay, you know, what goes down must come up, and it does. Obviously, don't bet against the U.S. economy. And then same thing, contrary to belief here, we have um, in 2007, we saw the peak of the financial markets. And then it took, the bottom was a year after, or the year and a half after, but it took another 6, 7 years to get back to that level. And then ever since then, everyone is fucking spoiled. Everything has just gone haywire, tits up, as I like to call it. It's ridiculous. Just everything that comes down comes right back up. And we are so spoiled. And that's why it's been so extraordinary to grow your wealth by not really doing too much and just saying it's gonna come back up, whether it's housing, whether it's the US economy or the global economy, whether it's the stock market. Everything just comes back up like that. And it's just kind of puzzling because in history, I've just shown you one example or two examples, right? The 2000s and the 2007, 8. It takes years to come back. Um, and I think eventually it's going to happen. I don't know exactly when, but where it's going to happen at some point, I think it has to because that's the natural cycle. You can only avoid it for so long. It's like having to go to the bathroom. Can you not go to the bathroom for the next 4 or 5 hours, and then maybe you'll get the urge to go, and then you'll be able to hold it. Okay, maybe you turn 5 hour gap to 7 hour gap. Not ideal for you, not good for you ideally, but you can hold it. Okay, you can hold it, hold it. You're gonna have to go at some point. So you can only delay the inevitable at some point, right? To an extent. So that's my view on that. But I apologize. I forgot to ask about questions, but by now, if you have questions, feel free to ask. We already got one by Jeff. Fantastic. Uh, and already knew he was gonna, I knew he was gonna mention this, but it's good for a refresher. Um, Man, look at this, right? And Jeff is bringing this up to give you guys an idea with the lesson, right? He's giving, he's trying to essentially tell you as a footnote what can happen um, to a company as it dwindles, right? In 2015, if you were an investor in Spirit Airlines and you were feeling fantastic because you had a tremendous 2 years, you know, man, you must have been feeling like a hero. But then if you held on thinking this airline's going to be the next, I don't know, like uh, uh, American Airlines or the next whatever, and it didn't pan out, it didn't pan out, and here we are. It's $1.47 from $80 or so to $1.47. And it's had a rough time. It's had a rough time this year because there were some buyouts, merger information, things that were supposed to happen. Those didn't pan out, right? You can see that. It rallied and it just got destroyed because the deal got blocked. And then ever since then, it's just operating on borrowed time, right? So we got a couple questions here. Great. PG, JNJ, everyone's favorite consumer staple, right? Along with J&J. Not much of a setup here. They already had earnings, obviously good earnings, dividends as well. So not the most greatest type of setup here. Uh, they have dipped below their 50-day moving average, but not the greatest setup. Not something that I'm too keen on yet. It's always on my watch list. Obviously, I like the company. Something we've looked at again many weeks here. Just just keeping an eye on it, but not really a good setup, ideally, in my opinion, yet. But great company nonetheless, right? Is a good for someone that wants to buy and hold a stock for long term. I wouldn't necessarily be like go out and buy it now, but it is a good company to have as part of your portfolio on, during certain dips when it does fall. Okay. J&J, I believe it was going to be a similar picture here. They too had earnings, did well. Solid, very bullish candle there. As far as an entry, not yet. Yeah, this thing is not back to where it was, but you can see this is a company that's just kind of, you could make it a case that it's a little bit of a downtrend in the long term downtrend, but this is a company that's stable, solid, not going anywhere, like you're not looking at these companies for hyper growth or to reinvent the wheel. They're really just here to effectively, you know, be a part of the dividends, give you that solid growth, give you that defensive nature during volatile market periods, have low volatility. So there's a lot of different things that are part of investing in stocks like these, um, and primarily during rough climates, economic and stock market climates. But if you have to allocate capital into something, you can't go wrong with this. Personally, on a daily chart, kind of zooming in, not the best setup, in my view, not yet. Right, we have overhead resistance here as well. I'd call this a triple top here around the 67 area, 6750. So not the most, I would say the most confidence inspiring, although earnings were good. It's a nice run up. But for me personally, not the best setup. Okay. Uh, Coming into MDT, Medtronics, MDT. So this company, funnily, as many of you know, have had many surgeries. Um, uh, this company makes, so my last surgery was in 2023, May, mid-May, I believe. So this company makes the actual, there's a titanium, or not even a titanium, they make a different material, but there's titanium, there's like this like plastic hybrid resin type of material. This product that they make essentially is to supplement, or not supplement, but like replace one of the tiniest bones in the human body, which is your hearing bones. Okay, each of us that are born, uh, we are each born with three. Uh, Again, this is a medical lesson, so we've done history lesson. We're gonna do a medical lesson now. Each of us are born with three tiny bones in our ear, and they're there to conduct hearing. Think of it like a puzzle. They connect to each other, and then they conduct hearing from the eardrum all the way into your hearing nerves, which then send a signal up to your brain. Okay, for what you're hearing, and then making sense of it. So for me, because of the surgery, then the inner ear disease, all that, 16 surgeries later, I've had to need some of these prosthetic to essentially replace some of the hearing bones that I don't have. Obviously, they're not as good as the actual good old God-given ones, but they're a substitute. So this is a company that makes those, and I was really pissed off at this company last year because my surgery got canceled three times because this company, the products that they make, like I mentioned, were on back order. They had a supplier issue, this, that. Anyways, we went in with the surgery once they were able to get substitute parts. I even spoke with this company, like the representatives and all that, and I'm like, it's funny, but eventually we went in for surgery May. 2023, and we didn't need the part. So hey, it worked out. But yeah, I know this company vividly. I've invested in it multiple times before, so that's a little bit of a health lesson for you guys. And this too, as you can see, going with the lesson perfectly as well. Um, I know Abhishek didn't intend it as being on part of the lesson, but you can see how this too didn't reach or hasn't reached the 2021 highs as well, right? So this is a solid company, great company. Uh, he says he went long at 90, right? So that's a solid entry right there. Look at this candle, right? So they do have earnings next month. Obviously, still a month away. Dividends already done. This is a solid bullish setup here. Just if you can really think of it as like a resistance being at 90 and then this breakout here, right? So I'm not the biggest breakout type of trader, as you know, for those that have been following me, but this is a very bullish one. I think you got a nice move, right? That's a solid couple percent. What is that? Yeah, nearly like about 2.5% move. That's a big move for this stock, right? That's a pretty big move, right? So, congrats, well done on that. I don't know if you still hold it, but that's great. Uh, Moving on, we have a question from Ryan. What do I think about DXCM for a long position? Let's look at this. Okay, Dexcom. I believe they have earnings as well, right? I could swear I saw something. Yeah. No, they had earnings already before. Sorry. Different wrong company. Okay. So this has been hammered post earnings, right? If I'm not mistaken, what's going on here? They missed on revs, but then they had positive EPS. I wonder if something changed in the guidance on the call. Dexcom, I haven't traded it before. Let's take a quick look. Healthcare, medical supplies. Okay. Sounds familiar. Okay. Okay, glucose monitoring systems. Okay, got it. Okay. I'm a bit of a health aficionado. So this dude had a nice run on Friday, right? How much was this? Another couple percent. So something's going on. Look what's going on there, right? Like 4% move. This is actually a pretty good setup for a long position. It's actually a good setup. I like that. It's consolidated here on the 67 area. You can probably call this 67, 66 area support area. Earnings is already done. Quite a big move though for this stock, right? Considering it's a medical device, medical company, it doesn't move too much, but a pretty decent move. So hence you can see why the RSI has also ticked up quite a bit rapidly. But keep in mind, they do have earnings October 24th, and I was right. 24th is a Thursday. Dexcom, look at that. Look at that, right? I knew it. I knew it. I swear I don't have photographic memory, but uh, there it is, earnings, right? So that could be interesting. I think it's a good play. If you want to, of course, take that risk of that catalyst. As we know, earnings are a coin toss. We don't know what's going to happen. You know, we don't know how they're going to report or what's going to be said on the call, what their guidance is going to be. If you're okay with that catalyst, as long as there's no situation like here, the last earnings, hopefully not. Um, yeah, I think it's a good setup, right? It's a good setup. This has been a pretty volatile stock, uh, the past year, right? Even going back into September 2023, big pullback, right? Um, and this too has not hit the all-time highs of 2021. You can imagine how 2021 was such a insane year. I remember trading it. I'm like, this is ridiculous. It was so frustrating as being someone who's more rooted in reality and looking at stocks from a valuation, sentiment, realistic, feet on the ground, head on the horizon, not in the clouds type of scenario, and seeing all this stuff, everything, even the good companies, but even the garbage nonsense be worth so much and gone up so much and just be insane. And I was so frustrated because I'm like, this is stupid. This flying in the face of everything I've learned and all the experiences I've had. And of course, it didn't last long. It lasted a year and then everything just puked, right? And a lot of people got burnt in 2022, rightfully so, because the rug was pulled underneath them. But nonetheless, uh, A lot of healthcare companies, Jeffrey's saying a lot of healthcare companies have gone up. Yes, on Friday, right? It's interesting. You can see that a little bit of a sector rotation, perhaps, maybe, but it's too early to say. TD after the news on the beatdown of the getting charged by the U.S. On money laundering or lax, let's just say, compliance. Uh, this is not the first bank that's done that, but this was definitely, I believe, one of the largest settlements or fines for a financial institution, about 3 billion or something like that. So a big, big haircut, and of course it got slaughtered. So now that it's found the floor here, this is looking good. Jeffrey, as you know, I'm not the biggest fan of banks. I don't really care too much about the financial sector or trade it much, but you're right. This is definitely looking like it's found a floor. That's a big haircut, right? For a financial stock, it doesn't move too much. It's actually pretty stable, believe it or not. And of course, it's one of the largest Canadian banks. Big, big slap on the wrist here and a big mud on the face with that fine. But the fact that it's here holding up, it's back at currently right now, it's back to August levels, right? So undone the last 4 months or so of price action. Not bad. I think this is definitely could be a potential entry to see how it goes uh, following this past rough week for them, right? But yeah, fantastic questions. Thank you everyone for coming. Great speaking with you. Great catching up on markets. It will be an interesting couple weeks and a bit as we close in on the U.S. election here on November 5th. So it's all to play for. Again, the markets don't really care in the grand scheme of things in the long term who's president. Um, but in the near term, we can see that sentiment impacted. Okay. Uh, thank you everyone for joining. Have a fantastic rest of the weekend. All right. Catch you later. Ciao.